Welcome back to our channel, where we dive deep into the electrifying world of semiconductor giants. Today, we've got a blockbuster showdown featuring four industry titans: Advanced Micro Devices, Broadcom, Intel, and Taiwan Semiconductor Manufacturing. We're breaking down their key financial metrics, explaining what each one means, and comparing them head-to-head to see who comes out on top. Buckle up, because this is going to be a roller coaster of insights and numbers. First up, let's talk about the price-to-earnings ratio. This metric tells us how much investors are willing to pay today for a dollar of earnings from the past year. AMD leads the pack with a P/E of 60.75, indicating a high premium, while Intel offers the lowest at 24.58, suggesting it's seen as the least expensive relative to earnings. However, looking at the P/E 5-year average, which gives us a historical perspective, AMD's 5-year average is 55.80, showing consistent investor confidence. In contrast, Broadcom's P/E has more than doubled its average, reflecting its stellar recent performance. Looking ahead, AMD's forward P/E drops to 29.23, making it more attractive for future gains. Intel remains the lowest at 16.05, hinting at potential value for savvy investors. Moving on to the P/G ratio that considers the P/E ratio relative to growth. Intel shines here with a P/G of 0.62, suggesting it's undervalued considering its growth prospects. Broadcom, with a P/G of 2.08, is on the pricier side. While the other two companies seem to be reasonably valued after considering the growth prospects. Continuing with insider ownership, that shows the percentage of shares held by insiders. Broadcom tops the chart with 2.04%, indicating a good confidence from within the company. In contrast, we have Taiwan Semiconductor Manufacturing with only 0.02%. TSM leads the return on equity with an impressive 25.38%, showcasing efficient use of company equity to generate earnings. Very close is Broadcom with 22.23%, suggesting also an excellent efficiency. However, Intel's 4% and Advanced Micro Devices' 2.01% suggests room for improvement. Taiwan Semiconductor again comes out on top with a return of assets of 15.72%, proving its asset efficiency to generate earnings. In this metric, Broadcom has a modest 8.28%, although it is higher than AMD and Intel ones, at 1.65% and 2.15% respectively, shows it could optimize better assets if both want to compete in this industry in the future. Lastly, Broadcom takes the crown in the return on invested capital with 26.66%, showing excellent returns on capital invested, while Intel lags significantly at 0.23%. Another very important metric is the shares outstanding, since thanks to it we can see if a company can be considered a connival, like Apple or Alibaba with monstrous share buybacks program. In this case, AMD and Broadcom are increasing shares at a CAGR of 8.72% and 5.36%, respectively. Intel is reducing shares by 1.97% CAGR, potentially increasing existing shareholders' value. And on the other hand, is Taiwan Semiconductor Manufacturing without new shares emission or buybacks. Now let's talk about earnings per share or EPS. Broadcom boasts a staggering $43.65 EPS, dwarfing the others clearly in the evolution during the last decade. As we can see, Advanced Micro Devices and Taiwan Semiconductor have experienced a fairly similar evolution, although somewhat less positive than that of Broadcom. However, Intel's evolution had been very good until 2021, but during the last 3 years it has suffered a major drop from which it is still having a hard time recovering. Although it is true that analysts expect it to recover over the next 5 years, with a compound annual growth of almost 40%, which is very similar to AMD's 46.63% and doubles those of Broadcom and Taiwan Semiconductor, which are at 17.7% and 21.5% respectively. Looking at the evolution of FCF per share, we see that it is very similar to the earnings per share, which Broadcom's free cash flow per share has grown by 33.98% over the last decade, reflecting strong cash flow management. Again, Advanced Micro Devices and Taiwan Semiconductor have experienced a fairly similar evolution, although somewhat less positive than that of Broadcom. And finally, Intel has struggled with negative free cash flow in the last 3 years, which causes too much debt increases and a dividend pay cut in the recent years. Now, for all you dividend lovers out there, starting with Broadcom. This company offers a dividend yield of 1.31% with quarterly payments of $5.25. Over the last 10 years, dividends have grown at a compound annual growth rate of 34.63%, which is pretty sweet. Taiwan Semiconductor offers a lighter dividend yield of 1.28% with inconsistent quarterly payments between 50 cents and 65 cents. Over the last 10 years, dividends have grown at a compound annual growth rate of 15.1%, so we have less initial yield than Broadcom and also lower annual growth. Continuing, Intel offers the highest initial dividend yield of 1.61% with quarterly payments of $0.125 after cutting around 50% in 2023 due to his consistent negative free cash flow. Over the last 10 years, dividends have decreased at a compound annual growth rate of 5.71%. This is what all dividends investors should avoid. And as you can see, only by taking a look at free cash flow can be avoided. Finally, Advanced Micro Devices doesn't pay dividends, focusing on reinvestment and growth. But in the case that pays around 20% of their free cash flow like those tech giants, the payment would be around 18 cents quarterly, an initial yield of 0.45%. Operating margin is like the pulse of a business. It tells us how much profit a company makes from its core operations before paying interest and taxes. A high operating margin means the company is super efficient at turning sales into actual profit. TSM leads with 41.82%, indicating excellent operational efficiency, while Intel, with 1.29%, shows there's a lot of room for improvement. Profit margin tells us how much of each dollar earned by the company is pure profit. A higher profit margin means the company is super efficient at turning revenue into profit, which is what we, as investors, love to see. It's a sign of financial health and efficiency. TSM again stands out with 38.16%, showing high profitability. Intel's 7.36% is respectable but not competitive in this group. Over the last 8 years, Advanced Micro Devices, Broadcom, and Taiwan Semiconductor Manufacturing have shown very positive evolution in revenue and earnings, reflected in their strong market performance. Intel's growth has been flat, resulting in lower market returns compared to VO and SMH, the S&P 500 Semiconductor ETF. Debt to EBITDA shows us how many years it would take for a company to pay off its debt using its earnings before interest, taxes, depreciation, and amortization. In simpler terms, it's like asking, how many years of my salary would it take to pay off my car loan? Intel is the most leveraged with a ratio of 4.13, indicating higher debt levels relative to EBITDA. AMD has the lowest at 0.72, showing good financial health like the other two companies with the metric below 2.5. Next, we have debt/free cash flow. This one tells us how many years it would take to pay off debt using the company's free cash flow, which is the cash left after all expenses, investments, and dividends. It's like asking, how many years of my leftover money after bills and fun would it take to pay off my loan? Broadcom and TSM are relatively balanced with ratios of 2.12 and 1.66, respectively. Intel, with negative FCF, needs to address its cash flow issues urgently. And AMD has a higher ratio due to a little dip in their free cash flow in recent years. But with a normal free cash flow to this company, the ratio would be below 1, indicating also good financial management. The average price return of the last 52 weeks for Broadcom has soared with an 89.34% return, while AMD and TSM have also had some very good numbers. On the other hand, we have Intel that has dipped 7.75% despite the huge increase that it had during 2023. But remember, downturns can be buying opportunities for savvy investors. Broadcom and Taiwan Semiconductor have the largest market cap, reflecting its dominant position just behind the big player Nvidia. Size can provide stability and influence, but don't discount the smaller players like Intel or Advanced Micro Devices. Finally, analysts predict that in the next 12 months, the Advanced Micro Device price could hit $189.02, representing an upside of 16.53% from its current price of $162.21. But hold your horses. Personally, I believe the fair value is around $141.50 after adding a margin of safety of 15%, suggesting it might be overvalued at the moment. Also for Broadcom, analysts predict an upside of 14.89% from the current price of $1,605.35 to $1,844.46. But for me, a reasonable price would be around $1,452.22 after adding a margin of safety of 15%, indicating a potential overvaluation too. However, for Intel, analysts predict an upside of 29.35% from the current price of $30.97 to $40.06, and for me, a reasonable price would be around $38.15 after adding a margin of safety of 15%. Which is very close to analyst expectations and suggests a potential undervaluation. Despite this clear undervaluation, it is necessary to think that current debt levels of this company are too high, and without getting a consistent positive free cash flow, it would be impossible not to increase more. So can be one company that goes into bankruptcy in the next few years if it does not change something in its operations. Finally, for TSM, analysts predict that in the next 12 months, the price could hit $186.96, representing an upside of 7.57% from its current price of $173.81. But hold your horses. Personally, I believe the fair value is around $153.95 after adding a margin of safety of 15%, suggesting it might be overvalued at the moment. And there you have it, folks. An in-depth, head-to-head comparison of AMD, Broadcom, Intel, and TSM. Each company has its strengths and weaknesses, and now you're armed with the knowledge to make an informed decision. Which semiconductor giant caught your eye? Let us know in the comments below. If you found this video insightful, don't forget to like, subscribe, and hit that notification bell so you never miss an update. Until next time, keep investing wisely.